Michael Burry's warning for the stock market crash. In 2005, Michael Burry warned of a coming housing market crash and earned the title of Big Short Investor, profited a whopping $100 million by betting against subprime mortgages. Fast forward to 2021, and he's warning about another bubble, this time in the stock market. He's particularly concerned about the frenzy surrounding meme stocks, cryptocurrencies, SPACs, and other trendy assets. Burry predicts that these investments will ultimately end badly for investors. Some may brush off his warnings, citing the current strong performance of the stock market. But as we saw with the housing crash, it's important to listen to those sounding the alarm before it's too late. Burry isn't alone in his concerns. Billionaire investor Ray Dalio and JP Morgan CEO Jamie Dimon have also spoken out about potential risks in the market. It may be tempting to jump on the latest investment trend, but exercise caution and do your own research before diving in head first. Some may argue that these assets have performed well in the past and are still performing well now. However, Burry emphasizes that historical performance is not a guarantee of future success. He warns against getting caught up in the hype and urges careful examination of underlying fundamentals before investing. It's important to remember that while it may be tempting to jump on the latest investment trend, it's always crucial to do your own due diligence and not get swept up in the hype. As Burry warns, history has a way of repeating itself. In February of last year, Michael Burry warned that there would be high inflation rates as a result of the Federal Reserve's unprecedented money printing. In preparation for inflation, he tweeted repeated warnings about the doom it would bring and tagged all US government and Federal Reserve for issuing trillions of dollars in stimulus. Though Fed was busy printing money, but the inflation was control even below the Fed's target. But again, it peaked in a fashion Burry had predicted. But why does Burry think a stock market crash is imminent? In an interview with Business Insider, Burry said that he is seeing many of the same signs that preceded the housing market collapse. Specifically, he pointed to easy credit conditions and rising asset prices as red flags. He also noted that there is a lack of fear in the market, which could lead to complacency among investors. While Burry's warning shouldn't be ignored, it's important to remember that stock market crashes are notoriously difficult to predict. So, while his predictions may prove correct, there is no guarantee that a crash will actually occur. In a recent series of tweets, Burry has said, after 2000, the Nasdaq had 16 bear market rallies over 10%, averaging 22.7 before bottoming down 78%. After 1929, the Dow had 10 bear market rallies over 10, averaging 22.8% before bottoming down 89%, warning individuals to be prepared for the unclear yet imminent stock market crash. In a possible economic mess, what does the future hold for trendy stocks like Bitcoin, meme stocks, and SPACs? Let's uncover. The future of meme stocks, cryptocurrencies, SPACs, and other trendy assets, according to investor Michael Burry, is shrouded in uncertainty. In a recent interview, Burry said that while he's bullish on the long-term prospects of these assets, he believes that we are in the midst of a bubble that will eventually burst. He compared the current situation to the dot-com bubble of the late 1990s, when technology stocks soared to stratospheric heights before crashing back down to earth. Burry warned that investors needed to be prepared for a potential market correction, and he advised against putting all your eggs in one basket. Only time will tell whether his predictions come true, but it's safe to say that the future of these assets is anything but certain. So, what are the safe investment avenues in these uncertain times? Making money in turbulent times. Many people believe that the only way to make money in the stock market is to buy low and sell high. However, this strategy can be difficult to implement when the market is in a downturn. In times of economic uncertainty, it can be wise to follow the advice of investor Michael Burry and take a more defensive approach. Burry recommends 3 measures for protecting your portfolio from a market crash: diversification, hedging, and cash reserves. By spreading your investments across different asset classes, you can minimize your risk. Hedging allows you to offset potential losses by investing in assets that are not directly affected by market fluctuations. And keeping a reserve of cash on hand ensures that you have funds available in case of emergencies. Following these measures may not guarantee success, but they can help to safeguard your investments during difficult times. In October 2020, he tweeted that he had sold all of his stocks and was holding cash in preparation for a crash. As of February 2021, the stock market is still going strong, with record high levels. It remains to be seen if and when Burry's prediction will come true. But in the meantime, it can't hurt to take precautions and protect your investments. Conclusion: while Michael Burry's warnings about a potential stock market crash should not be ignored, it is important to remember that taking measures such as diversification, hedging, and maintaining cash reserves can help protect your portfolio from potential losses. Ultimately, it is up to the individual investor to make informed decisions and carefully weigh the risks and rewards of their investments. Please watch our other video about Ray Dalio prediction about the market to make an informed and calculated investment decision. If you enjoyed watching the video, then do us a favor. Like, share, and subscribe to our channel, as that would surely give us a boost to create more. That's all for today. Thanks for tuning in, and we'll see you next time.